All right, Brian Shannon here from alphatrends.net. Today is Monday, July 19th, 2010. Let's take a look at the S&P 500. First, we'll start with this weekly time frame. As we know, the market has recently seen a test of the 38.2% retracement from the March 2009 lows to the highs that we have seen this year. It bounced from that level, and we had quite a nice bounce, actually. And that bounce came into trouble last week near the 50-day or 10-week moving average that we see here on this weekly time frame. And now we still have on the weekly time frame a pattern here of lower highs and lower lows. So it seems to make sense that we're likely headed back down towards that 101 level again. And if 101 fails to hold, then longer term we could be looking at this market down near about 95. But let's take a look at the daily time frame to see some better close-up action of this market. And here we can see that 50-day moving average, how last week we had found the resistance there. And it was actually on Friday where the market had broken down through the 5-day moving average and broken the support near that 108.20-ish area. So as we know, we've been calling this market innocent until proven guilty on an intermediate term standpoint because it remained above that orange 5-day moving average. So we had this nice pattern of higher highs and higher lows, similar to back in early June. And then back in mid-late June here, we'd seen the breakdown below that 5-day moving average, and from there it was guilty till proven innocent on an intermediate term time frame until we got back above it. And right now, with the market below the declining 5-day moving average, it is still guilty till proven innocent on the intermediate term time frame. And on the daily time frame, with a declining 50-day moving average and this pattern of lower highs and lower lows, it says that the best bet in here is to be short right now. Now today the market really didn't do a whole lot of anything. It was pretty light volume as compared to the last 20 days average. That's the purple line that you see down there. Just kind of consolidating and stabilizing a little bit after Friday's fearful sell-off, and I think waiting for some more of this earnings news. So it's really going to be dependent upon earnings and the market's reaction. But news and surprises tend to follow the direction of the trend, and with the primary trend lower, you have to brace yourself for more downside. If this market can get back up above the 5-day moving average in this 108.20 area and hold above there for a half hour or so, then perhaps the market can turn back around. But right now, it again remains guilty till proven innocent, and looks like we're probably headed at least for a test of this 105, 104 and a half area, where we've seen some support more this year. So I think that you have to be prepared for more downside.